Good afternoon, Daniel Shepard at First Metropolitan Mortgage giving you today's mortgage interest rate update. Today is Monday, August 25th. Today, the market did seem to respond fairly well to the retail sales numbers that came out earlier in the day. Retail sales did come in right around 5 million, which was pretty much in line with the 4.9 million that was projected. A little higher, but not enough to shake up interest rates at all. Looks like the economy has taken the front page of the news, and anytime you have economic news coming out, it does tend to make an impact on interest rates. The economic news seems to be a bit bleak at the moment. You have several projections coming out saying that our current economic situation will drag on a little longer than expected, which sent the stock market barreling down about 250 points. Anytime you get something like that, typically interest rates respond fairly well. We didn't see a significant decrease in interest rates, not anything to write home about, but we are starting to see the trend that we need, and interest rates are heading in the right direction. If you're being quoted higher than 6.375 today, you're probably paying too much. Odds are anybody that is quoting above that is probably hedging the fact that interest rates will have a negative response in the coming weeks as it relates to some of the economic reports coming out. I myself believe that it is still a float situation, but I'm going to put out a cautious float. We had some improvements today that you can capitalize on. We've been teetering around the 6.5, 6.375 range, and if you're getting ready to close here in the next week or two, my recommendation today actually would be to lock in the short term. Unsure exactly what's going to happen Tuesday, Wednesday, or Thursday, but we have a variety of reports coming out. GDP, which looks at the gross domestic product, which is a great indicator of whether we are in a recession or not, will be out later on this week. We also have durable goods reporting coming out, which basically looks at new orders being issued by a variety of manufacturing companies out there. So in essence, it's pretty much a big week for economic data, and if you're too weak to handle the risk, I would recommend going ahead and lock, because today is a good lock day as it looks for the short term. However, if you're a bit of a gambler, I think rates should still continue to improve. We're still in that cyclical period where rates tend to do a little better towards fall and winter. So I'm looking at interest rates to improve over the next 3 to 4 weeks. Hopefully you're finding some good bargains out there. Homes are definitely at a rebate. We're going to get our total amount of existing inventory here later on, but the preliminary numbers that I've seen online so far show that we have an inventory of homes staying on the market for almost a year, 11.2 months. That's amazing. That means there are a lot of homes available, and that means that there are some bargains available as well. If you have a chance, give me a call. I'd be happy to answer your questions at 719-314-1320 or visit me online at www.onlinemortgagebank.net. And finally, as usual, if you have any feedback, I'd greatly appreciate it. Have a great day and happy hunting.